Morning, guys. It's Wednesday, July 9th, 5:26 a.m. Central Time. Grain markets are mixed this morning. December corn futures up a quarter cent at 414 and a half. November soybeans unchanged at 1017 and a half. December Chicago wheat up a quarter cent at 568 and three quarters. December Kansas City wheat down 3/4 of a cent at 546 and a half. December spring wheat up a half cent at 653. The United States had some words for China yesterday. Why don't we start there?
So the U.S. is targeting foreign investment in U.S. agriculture, with the Trump administration moving to block farmland purchases by nationals from countries of concern, particularly China. The USDA will collaborate with state lawmakers and join forces with the Treasury Department's Committee on Foreign Investment to review foreign purchases of U.S. farmland. As part of the new National Farm Security Action Plan unveiled on Tuesday, fines for late or false filings on foreign farmland investments will increase to 25%, among other measures. In 2023, foreign-owned farmland grew to roughly 45 million acres, or about 3.5% of all privately held U.S. farmland. Of that total, China holds less than 1%.
Mackenzie, this sounds to me like they're solving a problem that isn't really a problem. So you said that foreign farmland ownership is 3.5%. And of that 3.5%, China owns 1%.
Less than 1%. Yes.
Less than 1%. So China owns like basically nothing in terms of U.S. farmland. I remember the story a couple of years ago. We were talking before we started taping. The state of Arkansas in 2023 ordered the subsidiary of a Chinese-owned company to divest itself of 160 acres of farmland. I mean, you're talking pretty small numbers here. So there was a USDA press conference yesterday, and Senator Roger Marshall of Kansas spoke. We've got a couple video clips we're going to play. He was kind of harsh. Let's listen to what he had to say.
Today, we tell China to get the hell out of American agriculture. Today, China, here's your ticket. Do not pass go. Get the hell out of American agriculture. And the Trump administration is going to lead the way.
Do we actually want China out of American agriculture? I don't know. Here's U.S. soybean export sales total commitment. China has bought almost 23 million metric tons of soybeans for the current marketing year. That's 45% of all U.S. export sales, and that's roughly will equate to 19% of all demand for U.S. soybeans. It's 832 million bushels is ballpark the amount of soybeans that China will ultimately end up importing from the U.S. this year. Senator Marshall went on to say that perhaps this could be offset by 45Z. Let's listen to those comments.
45Z is going to do more for agriculture than all the soybeans and sorghum we sold to China in the past 5 years.
Okay, so he's talking 45Z and that perhaps you'll see this big expansion in soybean crush and biofuel and that it's going to offset China. I don't know that that's possible. So we just said that China is going to account for, north of 800 million bushels worth of soybean demand this year. USDA is projecting that U.S. soybean crush will expand by 70 million bushels during the 25-26 marketing year. So I understand the idea here. It's posturing. It's posturing and it's PR, but I don't know. I feel like they're going after a problem that isn't really a problem here. So I don't know. I think China will buy new crop U.S. soybeans. They haven't yet, but they do every year. And China's going to buy not based on comments from U.S. politicians. They're going to buy based on price. And if U.S. soybeans are competitive post-harvest, I think they're going to buy U.S. soybeans post-harvest. That would be my thought. Okay, we had another ugly day in the markets yesterday. Why don't we start there?
So corn futures.
We're not starting there. Sorry.
Corn futures declined for a second straight session yesterday. The December 25 contract dropped nearly 7 cents, settling near $4.14 per bushel. The sell-off followed Monday's crop progress report, which showed 74% of the U.S. corn crop in good to excellent condition, the highest rating for the week since 2018. Additionally, a favorable forecast calling for scattered rainfall and a lack of extreme heat is expected to limit crop stress. These ideal growing conditions have prompted many analysts to project a national average corn yield above trend this season.
So I see the yield estimates being thrown out, and I haven't really seen anybody who's talking below trend. And why would you, based on the weather and the crop ratings? December corn futures posted fresh life of contract lows yesterday, 413 and a quarter, and we're not too far removed from that today. I don't have an opinion on the size of the U.S. corn crop. Crop ratings can be very, very flawed. there are some problem areas. You've still got a lot of weather to go, but it would appear to me that fund traders, large speculators, whoever it is that's selling corn, and I don't think it's farmers selling corn down here, they believe that we're going to be above trend. I think that that's the conclusion that I can come to. And that's what they're focused on, because as we've discussed at length, demand is fantastic. This is not a lack of demand problem. The problem, I think, is that the market is just thoroughly convinced that the crop's going to be huge. Soybeans have acted a little bit better by comparison. We were lower again yesterday. You've got this kind of shelf of support around that 10-11 neighborhood under the November soybean contract. Brian Split will be on in today's premium video to talk charts, and we'll elaborate on this further, I'm sure. Here's some past precipitation data. So over the last 14 days, you've seen substantial rainfall in the Western Corn Belt. And those are areas where it's been kind of dry. Nebraska and Iowa, South Dakota, Minnesota did very, very well. Illinois, Indiana, Ohio, drier by comparison. Looking at the forecast, Iowa's got a lot more rain coming here. Another, 2 to 3 inches for a lot of the state over the next week. I don't know that you're going to run into an excessive moisture problem. If you guys have any thoughts on that, let me know. I know it perhaps raises risk of disease pressure and tar spot and that sort of thing. Here is temperatures. So we're going to be above normal over the next 7 days based on Euromodel data. However, you're looking at a big cool down during the 8 to 14 day period. So again, as has been the story all summer, there's just not a U.S. weather threat, and the market does not see a U.S. weather threat.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
I've actually got the wrong slide here, but so we did simplified Trump tax bill and farmers with Paul Neiffer on Monday. Paul did a high level view, about a 12-minute video of everything that you need to know. People have a short attention span when it comes to policy. So we covered everything quickly and kind of got through it. We did calculating potential insurance payments with Chris and Shay last Thursday. If you're growing corn in the United States this year, you bought crop insurance, in all likelihood, 99% of you did. You need to know where your crop insurance floor kicks in. For some of you guys, you may already be there, but you need to play with the numbers. The video that we did yesterday was with Shay, and he talked about fungicide and nitrogen and the ROI associated with those items. And the big question that we tried to answer there was like, okay, do I go spend more money on these items despite the fact that the crop is probably going to lose money? I mean, we don't know what the markets are going to do, but at this point, it loses money. That was an interesting conversation. It's not a yes or no answer. There's a lot of context involved. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. We don't want to talk to you. We don't want to do your brokerage. We don't want to sell you seed. We don't want to sell you crop insurance. We just want to send you a whole bunch of information every single business day. Check that deal out this morning, guys.
Brazilian corn exports are expected to face headwinds this season. According to StoneX, the nation's exports are projected to rise to 42 million metric tons, about 9% higher than last season. There are concerns, however, that strong Chinese demand for Brazil's record soybean crop could keep ports crowded and slow corn shipments during the second half of the year. China, which has recently been Brazil's largest corn buyer, is also expected to cut back on imports due to a bumper crop. At the same time, the U.S. is forecast to harvest a record corn crop, which will likely increase international competition. As a result, Brazil will need to rely on alternative markets like Iran, Egypt, and Vietnam, although these buyers will not be able to match China's purchasing volume.
At first, I read this headline, and initially I was like, oh, maybe that's good for the United States, if Brazil's having problems exporting its crop. But you read into the details here, and it's actually the opposite of that. They're kind of saying Chinese demand is weak, and the size of the Brazilian corn crop, it's a big crop. The size of the U.S. crop is huge. So if China's really going to import less, which is something that USDA has been telling us for months now, that's problematic. It just means that the balance sheets could get a little bit looser. So no, that's not a positive story.
President Trump confirmed on Tuesday that he will move forward with his reciprocal tariff policy on August 1st, saying that there will be no further extensions for the country-specific tariffs. Although the negotiating deadline for trade deals had been set for this week, Trump pushed it back to August 1st to allow more time for talks. He also announced plans to impose a 50% tariff on copper imports, sending copper futures to their largest intraday gain since at least 1988. In addition, Trump warned that imported pharmaceuticals could face tariffs of up to 200% if manufacturers don't shift production to the U.S. within the next year. He is also weighing tariffs on other sectors, including semiconductors and metals.
We're waiting for a positive trade headline. We really need a trade deal with China, I think, very badly. We need some purchase agreements and large purchase agreements. It just feels to me at this point like that's the one thing that can bail us out of this mess. We saw how the markets acted last week when perhaps the markets or the trade believed that a trade deal was coming. We rallied sharply. It feels like that's the only thing that's going to do it at this point. That's just the way it's felt based on recent market action. Here's a copper chart up 8% just this week into some fresh all-time highs. Copper is sometimes people look at it and say this is a good indicator of economic activity because it's copper is used in so many industrial applications, but in this case, it's rallying for different reasons.
To secure a trade deal, Indonesia has signed a $1.25 billion agreement to boost its purchases of U.S. wheat through 2030. Under the deal, the country will buy at least 800,000 metric tons of U.S. wheat this year, an 8.1% increase over last season's volume. Then from 2026 through 2030, annual purchases will rise to a minimum of 1 million metric tons. While the agreement will expand market access for U.S. wheat, it will still represent only a small share of Indonesia's total wheat imports, which the USDA expects to reach 12 million metric tons this season. Indonesia also plans to sign similar deals to boost purchases of other U.S. commodities, including corn and soybeans.
Purchase agreements. Would you look at that? So Indonesia is probably not going to move the needle. They are the second largest wheat importer on the planet, but wheat imports, the way that it works, they're spread out among so many countries that the second largest importer is only 5.6% of global imports. So it's not something that the trade's going to get excited about, but we just hope that this is a sign of things to come from other countries. And again, China would be the big one.
We had a couple flash sales yesterday. U.S. exporters sold 144,000 metric tons of soybean meal to the Philippines. Of the total, 97,000 metric tons is for delivery during the current marketing year, and the remaining 47,000 metric tons is for delivery during the next marketing year. Exporters also sold 4 million bushels of corn to Mexico for delivery during the next marketing year.
There's going to come a point where we're probably just going to have to skip meal flash sales because they're going to be every single day because we're going to be crushing more soybeans the way that it sounds. I don't know. Corn to Mexico is something we need to continue to see. If you don't see it, that would be a problem. What did cattle do yesterday?
Cattle futures were sharply higher. Live cattle were $142 to $407 higher. Feeders saw gains ranging from $412 all the way up to $590. Box beef was also higher. Choice was up $206 at $393.04, and Select was up 93 cents at $378.46.
Outside market's pretty quiet this morning. The Dow's up 80 points. S&P's up 8. Treasuries are mixed. U.S. dollar's up just a little bit. Crude oil is up 19 cents, and the August WTI at 68.52. Have a great day, guys. We'll be back on Thursday.